This is video 3, dealing with an example that combines IAS8 with IFRS9, specifically share transactions in IFRS9. We are still busy with the given information. We have seen what was done, and we have now decided that we need to go and correct this error. And now they say to us, okay, but how can you do this? We have to fix it, and they say to us, well, it's possible to process correcting journal entries directly to the 2010 general ledger accounts affected by errors made, including income and expense accounts. So even though the financial statements for 30 September 2010 have been issued, you can open the general ledger accounts, which means you can get into the accounting system, the accounting software for last year, for 2010, and still post entries. Now, from an auditing perspective, a bit of a red light. I mean, if a year is finished, you roll forward that year in the accounting system. It should be done, closed off, rolled over to the next year, to the current year. But in this case, for some reason, you can actually open that accounting system of the prior year, which means you can go and post journals in that prior year, and they will automatically pull through. Because if you post it and it affects a balance, it will pull through and it will correct everything going forward. So it's nice that you can go back and do that. Is that a necessity? Is that the only way that we could go and correct an error is if we can open the accounting system? No. IAS8 doesn't say go retrospective, go back, go and correct the prior period error if the accounting system allows it. That's not what IAS8 says. IAS8 says go back retrospectively, go and correct the prior period error. Point. Stop. Right there. That's what it says. So if your accounting system allows that, well, great, then do it there. Post it there. But what if you can't open the accounting system? What if your accounting software closes off the year, rolls it forward, and there's no way to open it again? Well, then you would need to correct those errors, the effect of those errors in the accounting system that allows it, which would be your current year 2011. Which means, if we draw the timeline again, you had 2009, 2010, which is your comparative year, your prior year, and 2011. If your accounting system only allows journals to be posted in the current year, 2011, that's the only opening, that's the only place that is open still that you can post anything, you will need to take the effect of all the prior years. In this example, 2009, 2010, could have gone back further, but you will need to take that effect and post an correcting journal that takes the effect of fixing the error into account in the first possible place you can, which is fix the opening balances of 2011. Does that mean, if that was the case, it's not, but if that was the case, you can only post in 2011. Does that mean when you issue your financial statements, only 2011 will be correct? You'll leave the 2010, the prior year column as it is. It still has mistakes, and you couldn't go into the accounting system. You couldn't fix the mistakes. You couldn't post a journal. So 2010 column in your financial statements, it will still be wrong. No. You need to correct the error retrospectively, even if you have to do it on the financial statements with a pencil. You have to cross out amounts, retype them, put the right amounts in. The financial statements that you issue this year need to be correct completely. 2011 needs to be correct, 2010 needs to be correct. The opening balance that you now need to show, a third column, needs to be correct. The fact that you can't post it in your accounting system is not the issue. That just explains to the entity that is doing this work, where would they do it for their accounting purposes, their system, Pastel, or whatever else they use. From a financial reporting perspective, from the financial statements, every single amount that you present or disclose needs to be correct. If your accounting system doesn't allow it, well, then you need to do it yourself with a pencil and a calculator. Then the TB that the accounting system spits out for you is now not right. Then you go and fix it manually. You will enter it into the accounting system in the first possible date you can, so that the accounting system is also right and pulls through correctly. But the financial statements have to be correct regardless of what your accounting system allows or doesn't allow. In this specific case, the accounting system of 2010 could be reopened. So, I will post a journal to the opening balance of 2010. What does that opening balance do? It fixes what? It fixes all the prior years before that opening balance date. Cumulatively, altogether, the effect of correcting the error. What balances did that affect? What balances need to change? Write a journal to change those opening balances, because I can post it now in that 2010 year. Then you will also fix the 2010 year, which is period specific. You fix the period, the specific period, 2010, because the accounting system does allow you to post journals. So fix 2010. So when you have done these journals, the effect will automatically pull through. It will automatically fix that opening balance of your current year, because the accounting system will do that. So now you do not need to write a journal to fix the opening balance of the current year, because it will automatically be fixed. Your accounting system will do that for you. 2011 is your current year. You're still busy with it. Just do the right journal entries. Okay, so they told you specifically 2010 can be opened. Nothing before that could be opened. If you could open before that, well, then you would go to 2009. If you could open the 2009 year, you would go to 2009 and fix that period specific. Then you don't need to do a journal to fix the opening balance of 2010, because it will automatically pull through. Then you would again fix 2010 period specific. You don't need to do a journal to fix the opening balance of 2011, because it will automatically do that. So where you post the journals depends on the accounting system. But the financial statements need to be corrected regardless of what your accounting system allows or does not allow.